Welcome to A Course to Retirement with Grand Rapids Certified Financial Planner Ron Corser. Ron Corser and Associates are planning today for the potential of tomorrow.
And welcome into the program. This is your Course to Retirement with Grand Rapids Resource for a common sense approach to planning for our financial and retirement futures. He is president and founder of Ron Corser and Associates, CFP, Certified Financial Planner. Ron Corser here with us. Ron, always a pleasure. Welcome back in.
Thank you very much, Peter, and welcome to everybody listening to today's program. This one is going to be a little lighter in context in what we're going to cover, although I'm going to use a four-letter word that actually has 6 letters in it, and I want everybody just to still love me after I mention that word, but it's just part of what we're going to talk about, the whole thing about year-end planning. Now, the year is fast approaching an end, and there are some things which really don't have, I think, any application right now simply because it's too close to the end of the year. But there's one I'm going to touch on in addition to some other little, what we call tidbits or little things to consider. But I'm going to start off with that 4-letter word that has 6 letters in it. And I want everybody to show me a little bit of grace, a little bit of kindness, a little bit of love. One of the things that my wife, Nancy, and I, we don't struggle with it because she just throws her hands up in the air when it comes to me and Christmas and my grandchildren. And that is, Ron, let's figure out what we should buy and how much we should spend. And I say, that's good. And I agree to it. And then I go shopping. And I don't know, something just comes over me, you know, it's like I can't help myself, but, oh, little Max would like this, Emma would like that, Braylon would like this. And before you know it, I've just made the whole quarter for Costco because that's where I go Christmas shopping to begin with. So what is that 4-letter word with 6 letters in it? It's called a budget, B-U-D-G-E-T. And one of the best tips that and I do follow it after a while. My wife she loves me anyhow, which I'm really grateful for, actually. But a budget's really important. And I'll go back in my life, and I'm going to share a little bit. There was a time in my life when money was a bit scarce. Probably everybody's had that experience. And I would struggle. We would struggle with what to do with the kids, you know, because I just wanted to make sure that they had a happy Christmas and all of that. And I was forced to budget. I didn't have a choice because I couldn't live with a credit card that would have this enormous number on it. And back then when my kids were young, in today's numbers, it's not so enormous, but it was back then. Yeah. So we had to be careful. I had to be very, very careful of what we did. Fortunately, in our family, we had a couple sets of grandparents that didn't understand the word budget. So they would just lavish on our children, and that kind of made up for it. And the kids, frankly, didn't care where the presents came from. They just wanted them. Yeah. And they were at that age that made some sense. But as we got a little older, we still kind of try to say, well, what should we buy? How much should we spend? Where should we allocate money? Because even if you've got a lot, money's still scarce. It's still one of those things, how are we going to use it properly? So I'm still planning on spoiling my grandchildren. And here's a tip off the books. Here's what I buy for my grandchildren. I buy them things that I like.
Okay.
Do.
Yep.
Because down deep inside of me, I still think there's this 6-year-old kid. So I will buy things that I'd like to play with, games, goofy stuff, you know, like gooey stuff that you put all over the table and make prints of and things. And both my children's and their families say, well, how do you figure out what to do? I just say, I just go buy things that I would like, because a lot of the things that I like and intrigue me are not grossly expensive. They're simply not. And so one of the things that we talk about is let's do a budget. So please forgive me, love me anyhow through the end of the year. All I'm saying to you is when it comes to deciding how we take care of our spouse, our husband, our wife, our brothers and sisters, our family, our children and grandchildren, you can go broke no matter how much you have, but you can also buy really cool things that are different. And we're going to go through those. So there's not a reason to say, oh my goodness, the Grinch, Ron Courser's the Grinch and he just stole Christmas from all of us. I'm not doing that. I'm just saying that sometimes it's a good idea to just sit back and say, well, what seems reasonable, what's appropriate, and to go forward that way.
Yeah, well, we've had the budget conversation in our household, Ron, for probably the last 2.5 months, and going back a number of years, that's sort of been our discussion. And yet still we find a way seasonally every time to go beyond that budget. But I think what having those discussions have allowed us to do is prevent the blessings that we intend to give to others in November and December from becoming a curse to us in January and February, because it's a whole lot easier, it seems, to dig a hole than it is to dig your way out of it. And so while that budget is a 6-letter word and it can feel a little grinchy, I know that's the terminology my wife uses for me. She even bought me the shirt with the Grinch on it. But it's something that helps us to maintain our stability and our sanity, not just in the holiday season, but thereafter. If we're not stressed about debt, we can have much more reasonable, pleasant conversations about money and making further financial progress. And I think that's the key to the holidays, is don't let the blessings that you want to give to others become your own curse or be to your own detriment. And we can so easily do that these days with the credit cards and the debt generation environment that we are in. Before we go in any further, Ron, and we talk about some of these ways to give your holiday budget a boost and some of the ideas for keeping within that budget, I do want to remind viewers, listeners to the program that Ron Courser does make his time available to you. If you've got any questions, if you've got any concerns about any of your planning matters, pick up the phone and give a call, 616-301-2581, 616-301-2581, 616-301-2581. You can also go online, roncourser.com, roncourser.com. Lots of fantastic resources available there. The blogs, previous editions of the podcast. You can subscribe so you get notified on each topic that we come out with to discuss each week. There's tools, there's calculators, there's reports, and there's always the opportunity to be in touch with the team. Again, online, roncourser.com, or give a call, 616-301-2581 if you'd like a complimentary review, if you'd like to talk about some year-end planning strategies, or even if you have a very specific quick question that you'd like to ask a certified financial planner. 616-301-2581. All right, so there's the pitch, there's the number. Ron, let's get into it. Can you help us out and give us some tips for staying sane during the holidays and keeping within that budget?
Yeah, I can. Here's one of the things I did, and I actually got a compliment from my children when I did it. We have grandchildren. And for all of us who've had little kids, we know that one of the hardest things to teach is to share. So one day I was just thinking about what to do, and particularly with one set of granddaughters. I don't know what it is about girls, but they just seem to go after each other and taunt each other a little more than guys, I think. But here's something I did that was well received by my children, the parents of my grandchildren, is yes, we bought toys, but I also sent them an envelope at Christmas time. I have a son and daughter live in Ionia, which could be 100 miles away sometimes, and in Columbus, Ohio, which is 5.5 hours away. So what I did is I sent each one of the grandchildren a Christmas card with money in it, because they always liked money. And what I did is I put a $10 bill in there for one of the grandchildren, and I added another $10 for her sister. And I put a little sticker on the one $10, and I said, "This is for you." This was Olivia, my granddaughter. And another $10, I said, "This is what you must share with your sister, Isabella." My son called me and said that was one of the most interesting things he's ever gotten. He said, because the older daughter,
I love it.
It made her crazy. She really struggled with it, but she did in fact spend it on her sister. So I did that too with my other daughter and her husband. They have 3 grandchildren, and I got kind of the same response. The youngest one, Max, he could care less. He just had some money. He thought he had $1 million. But with Emma and her bigger sister, it was same kind of response. So one of the things I do every Christmas is I do the very same thing. And they're almost used to it, I think. And then I ask them when I see them, did you share that with your sister? And generally they say yes. And generally, I'm looking at their face when they say it, it was a really hard decision, but they do it anyhow. So that's one of the things. The other thing I suggest to people, it's an idea, it's called the 4 gift rule. And it's something, you give something that they want, something they need, something to wear, or something to read. And it makes it really simple. So what do I give my son and daughter? I give them some things to read, but I also give them some things to do with their grandchildren, my grandchildren, their children, something that a parent has to do. It's generally not an expensive situation, but I do that for them. And they seem to like it. Now, I will confess that we also buy what is considered to be really dumb things for our grandchildren. I don't think they're dumb because I like them, but I take a look and see what my daughter's does or my daughter-in-law, and I realize that somehow I crossed the line as to what I was supposed to do. But you know what? Because I buy things that I would like to play with, my grandchildren seem to be okay with the whole 9 yards. So that's one of the things we can do is to do things that make our children interact with our grandchildren a little more.
Yeah.
It's a strange world we live in sometimes, and parents don't do that a lot. So I make them do it. So that's an idea that we use at Christmas, and I get joy out of it.
I am a big fan of the experience gift, not the toy, not the knickknack, not the item, but to give a gift of some experience together, taking a trip together. Here's our Christmas present for this year is that we're going on vacation here or there, or we're taking a cruise. Obviously this year that was tough, but actually that was my gift last year to my family. And we ended up taking our cruise and then getting back right before all the cruise ships and cruise liners locked down and that stopped happening. So it was nice that we got to go. It was a good gift because we all knew that we would have that experience together. And then we all looked back on it and said, well, we're glad we did that before we didn't have the opportunity to do it. So I'm a big fan of that. And it sounds like you're right along the same lines, Ron. Your 2 ideas of giving them something that they're in turn supposed to give to others so that they're sharing and they got that gifting spirit, and then something where it encourages time spent together. I like both of those ideas a lot.
Yeah, it's worked for me. I know that growing up, I was like a lot of guys. I worked far too much, and in retrospect, spent far too little time. It's not that I abandoned my family, but sometimes we get out of balance and things like that. So that's one idea. And folks, let me just say to you, we're still open for business, as it says in December. The world doesn't shut down. We're very much aware with what's going on politically and economically here a few weeks before Christmas. So if you have any questions, you have any things you want to talk about, please give us a call. Our job is to help people. And sometimes that means just giving them good advice or an article or answering their question over the phone. Give us a call at 616-301-2581. Be more than happy to help you because that's what we're trying to do. I guess in the spirit of Christmas, we're going to give that, but we always try to do that as best we can. So here's another idea. And one of the things that I talk about is sometimes people want to volunteer their time. It's really easy to do. One of the things Nancy and I do through our church is we help prepare Christmas gifts for a lot of people who don't have the opportunity to probably have much of a Christmas. I think one of the saddest things I've learned over my lifetime is to see little kids whose families simply can't afford to make a Christmas.
I read a great article. It's something that in my household we've sort of done without knowing that we were doing it, but it reinforced the reason for doing it. The article said don't give Santa credit for the big, lavish, expensive gifts. As parents, take credit for that, because when the kids show up at school or in gatherings with other kids and other families that can't afford those kind of things, those kids in turn think, well, why couldn't Santa do that for me? Was I not good enough? Did Santa not like me? So it encouraged parents to go ahead and take credit for some of the more expensive gifts and maybe give a couple smaller gifts from Santa. And I really liked that idea. And it sounds like you're in line with that as well.
Yeah, I'll share a little story. A long, long time ago, a lady in our church got up and gave a testimonial. And what they needed tutors for the kids in middle school here in Grand Rapids. So it's something that is on my heart. It drives me crazy because I absolutely believe that if you can teach a child to read, you've given them the opportunity to learn. So I volunteered. And the crux of the whole thing is that I developed a relationship with he was a young boy in the 7th grade. He's now a young man married with a child, to help him. But he was raised in a family that they weren't believers and they could care less about Christmas. So I made a Christmas basket for him. Now, I'm not bragging about what I did. Please don't misinterpret that. I'm just saying there are a lot of people in need, and it doesn't have to be a major event in our life to help people. You just find somebody that has a need and you fill it. And so what did he need? He needed gloves. He needed socks. Actually, he needed food too, and a couple other things. Plus, he was a big University of Michigan fan. So I got him a couple books on Bo Schembechler and Michigan football, and I got him a Slinky toy. And I found an old-fashioned Slinky toy that actually works. So I put all that together. Now, the amazing thing is, he wasn't expecting anything for Christmas. So I stopped by his house. I was kind of mentoring him, and I gave him that. You should have seen his face light up. It was amazing. So what I tell folks is, you don't have to be a good Samaritan. You don't have to be a lot of things. All you have to do is look around and say, who has a need? You know, sometimes we have in our church, we have a lot of immigrant families. And I think by definition, a lot of them don't have a lot. So what we do is we help provide really neat things like, you should see a child's face light up when you give them a backpack or you give them a new pair of shoes, because they don't have these things. We assume everybody has them. So one of the things that can really, I think, add to the whole idea of Christmas and giving is just look for a small need and give it to somebody. It could be as simple as you have a neighbor that's a shut-in. Go knock on the door. Give that neighbor a Christmas card and maybe a box of cookies if you made them.
A meal, food is always great, right?
Yeah, it doesn't have to be a big thing, just to show people you care. We live in and I'm going to go off the deep end here for a moment. We live in a world with, we seem to sometimes forget, and sometimes people only want to volunteer if it's on the TV news. That's just my opinion. I think there's a lot of stuff going on in the world, in our neighborhood, where we can be actually make a mark on somebody's life, showing them we care. So those are some of the things we can talk about. I don't want to get too deep in them. One of the other things you can do, for those of you who are absolutely bored out of your mind coming into Christmas and you don't have enough money, is go down to the FedEx or UPS store. They will be more than happy to hire you in the warehouse. They are screaming for people.
Yeah, yeah.
You can work as many hours or as few hours as you want, and the pay is pretty darn good.
There's two ends to a budget. There's what you're spending. You can control that. And in certain cases, you can also control what you're earning. Getting that side job, a little gig, a side hustle, if you will, could earn a few extra dollars for a few extra gifts. That could be a blessing and help you balance that budget during the holidays. Ron, yeah. I also want to mention that at your office, you are a Toys for Tots drop-off site, and through December 14th, you're taking donation for the Toys for Tots as well.
Yeah, thanks for bringing that up. We try to do that. We did that last year, and we had overflow of 2 big boxes. So ladies and gentlemen, we have 3 big boxes in our office. And to participate in the Toys for Tots, just buy a toy that's wrapped. I mean, not wrapped with Christmas paper, but just it's wrapped, it's sealed, and bring it to our office and drop it off. The need out there is incredible. And the Toys for Tots this year, it's really a great thing to give to. It doesn't take a lot of effort, but you will bless some young child. And by blessing them, sometimes we can get blessed ourselves. So stop off at our office. It's on Charlevoix Drive, or you can call our office to get directions, 616-301-2581. Be more than happy. We've got 3 giant boxes here. They're getting filled up fast. The more you can do, the better off we'll be. I have a profound weakness here. I always end up going to the store and saying, oh, that would be a good idea for Toys for Tots, or I can buy that. But it's another way to give that doesn't, man, it doesn't take a lot to make a difference in somebody's life.
Yeah, great cause. And again, donation drop-off center there at Ron Corser and Associates, going through December 14th, running through the month of November and until December 14th, but we're closing out on that drive for the Toys for Tots. And again, if you'd like to drop something off to contribute, just stop by Ron Corser and Associates. Give a call, 616-301-2581, 616-301-2581, 616-301-2581. Ron, a lot of times for our family, and this is something that I've taught my son. He's 11, but a homemade gift, a homemade card can really go a long way without requiring that you spend a bunch of money.
I'll tell you, I enjoy getting the little handwritten pictures and notes from my grandchildren. They mean more to me than the cards I get, although I do appreciate cards too. It can be, it can be really touching. You just send a note to somebody to just say, you know what, I was thinking about you. You're in my prayers. I hope you have a blessed Christmas. Let me know if I can help you in any way. Take care. People like that handwritten note. You can do it very easily. Or, another thing you can do, and I've done it, you can just pick up the phone. and it's something that a lot of people don't want to do, because every time I pick up the phone to call my kids, I get voicemail. But if I text them, they answer right away. Yeah. Because both my kids, they're hooked at the hip with their iPhones. But sometimes you can just leave a note to say, you know what, Merry Christmas. I love you, thinking about you. Give me a call when you get a chance. Those kinds of things are precious, and they make a lot of difference in people's minds. Another thing we used to do a lot of, and we still do it when we have family gatherings at Christmas. And I'll tell you what, this COVID thing, it's kind of aggravating me because it's messing up the family stuff a little bit, but I understand it. But we used to just draw names. So you might have 25 people together for something before pre-COVID.
The old Secret Santa idea.
Yeah, kind of thing. Or we'd buy things and we'd make a game out of it. With Nancy's side of the family, we draw names, pick a present that's wrapped or something, and then you can bid on it and change it one time. It's kind of a fun game to play. We put a limit, I think, of $20 on it or something like that. So invariably, I end up with a credit card or one of those cards to Cabela's or a book or something.
My brother is the king of that game. He would put the gift in a gag box or package, and it wouldn't be what was in the box or package. So one year it was like slippers for your dog was the package, but inside it was actually a really nice gift, some gift certificates or some kind of dinner set or something, maybe a bottle of wine. I don't remember that one specifically, but I know another year he had a bag, pretty nondescript, and inside were a couple live lobsters.
Wow.
Yeah. He's always pretty creative with that.
Oh, that's pretty good.
Yeah.
Well, I know last Christmas I surprised my wife. She likes to buy little things for me. And it seems like she likes to buy a lot of little things. So what I did is I just got one box, and I had 4 different boxes inside of it. So she had 4 different presents. But when I gave her the box, she seemed excited, not overly. And as she kept opening up, I could see the change in her face. That was one of the best experiences I had in Christmas with my wife. I didn't, go out and buy her a 14-karat diamond ring or anything, but just to have her go through that, it was pretty neat. I know with my grandchildren, everybody has a tradition, right? You got one, I got one. One of the traditions I have is we give stockings in addition to some gifts. And I always wrap the stuff in the stockings in tin foil, because that's the Ron Corser Christmas. It goes back a long, long time ago. My kids always expect it, but we always wrap up everything and make them get into the stocking. I do it for my children and grandchildren, and they have to unwrap it. It's just not dump it out and see it. They have to unwrap it.
Mm-hmm.
And it seems to make all the difference in the world for putting stuff in a stocking. So that's a tradition that we do. I always do it. One of the things that they always look for is we buy animal crackers, which are getting harder and harder to find.
Yeah, yeah.
But it's still a tradition that we keep going. And a couple of years ago, I couldn't find any because I started too late, which is another tip, ladies and gentlemen. Start your Christmas shopping
Start early.
Today. Now,
Yeah.
do it, because things will go away. And they were actually, my son said, well, what happened to the animal crackers? So it's little things mean a lot sometimes.
They do.
It doesn't have to cost $5,000.
Well, again, we're talking about some tips to make the holidays a little less stressful here on your course to retirement today. And of course, it's a season about giving. It's a season about blessings, but a lot of times we get stressed out because there's so much on the to-do list and there's so much money involved. We've got to buy the gifts where we feel obligated to do so and to buy a certain amount for certain people, and sometimes to splurge and overspend and even go in debt. The studies that I have shown or read and recent articles have shown that a lot of Americans go into extensive debt for the holidays, and then they're paying for that, and they're trying to dig their way out of that hole through the beginning of the next year. So let's not get into that cycle. Let's make sure that we are doing things proactively, planning ahead, staying within a budget, setting that budget in the first place, and being reasonable, but also showing that we care to those that we do care about and our loved ones, and then in some cases just for strangers or those in need. Ron Corser is holding that toy drive there at Ron Corser and Associates. If you'd like to donate to Toys for Tots, you can do that through December 14th. If you've got a financial question, if you'd like to make sure that you're planning strategically and proactively before the end of the year, now is the time to do that. Pick up the phone, give a call, 616-301-2581. That is 616-301-2581. And Ron, while I've enjoyed this segment, I think on the second segment of the program today, we are going to talk about some of those need to act on items, some of those proactive moves that we really should be considering. Now is not the time to shut the year down and not do any planning. We want to talk about some strategic opportunities to take advantage of before the end of the year when we come back here on your course to retirement. Again, if you'd like to get a jump start on your planning, if you'd like to look at your tax planning, some strategic moves for that, pick up the phone, give a call, 616-301-2581. We'll be right back with more with Ron Corser here on your course to retirement in just a moment. And welcome back here to your course to retirement. Grand Rapids, your resource for that common sense approach to planning for your financial, your investment, your retirement future is CFP Certified Financial Planner Ron Corser, president and founder of Ron Corser and Associates. Ron talked in the first segment of the program about the holidays, about some ways that we can help avoid some of the stress of the holidays. That 4-letter, 6-letter word, the budget, that's going to help us there. You gave us a couple ideas to control that on both sides, reasonable gifts, maybe earning a little extra money, but having that budget in mind, I think is key. During this part of the program, we wanted to turn a little bit and talk about some real strategic financial moves that we can make or we can consider toward the end of the year. Now's the time when a lot of people put things on the back burner. Oh, I'll take care of that next year. Maybe we procrastinate a little bit. But in reality, now is specifically the time that we should be more proactive in making sure we're taking care of a few things while there's the window of opportunity to do so before the end of the year. If you've got any questions about any of these strategies, ladies and gentlemen, give Ron Corser a call, 616-301-2581, 616-301-2581. But Ron, specifically, Giving to charity is something that there may be some additional opportunities to do before the calendar year flips.
Yeah, there really is. There's something called a qualified charitable deduction. Here's how it works, and it can still be done, 3 weeks from the end of the year, but it has to be done at the end of the year. You can, if you're 70 and a half or older, you can give up to $100,000 out of your IRA to a qualified charity of your choice. Could be a church, some other qualified charity. Now, this year, required minimum distributions were postponed for a year, but you can still give to a charity of your choice, a church, anything, if you're over 70 and a half with a qualified charitable deduction. And what this does is you can literally send out of your IRA up to $100,000 or $1,000, it doesn't matter. Have it sent directly to the charity of your choice. You still have time to do it within 3 weeks of coming to the end of the year. It has to be done at the end of the year, but it's a great way to give, and it doesn't require that you incur additional income, because if you take $1,000 or $100,000 out of your IRA, it's not considered taxable income. So you're able to give to a charity without incurring additional taxable income. The charity benefits, and if you have a giving heart, you benefit too. So that's something that can still be done this year. I know we're still doing some of that with our clients who have IRAs with us, and it's a simple process, and we're able to do that very quickly.
Well, especially
but you really have to.
The RMDs being waived, it may free up a few extra additional dollars to do that.
And if you're going to tithe anyhow to a church, why not do it out of your IRA? I don't think the Lord's going to look upon you sadly because you did something that gave you a tax break. It's just using the tax code for what means you need to do it for. Now, there's another thing to talk about too. If you itemize deductions, there's a change this year from the Secure Act. If you itemize deductions, you can deduct all of your cash donations up to 100% of your adjusted gross income. I'm going to say that again. If you itemize deductions, you can deduct with all of your cash donations up to 100% of your adjusted gross income. It had been normally previous year, it was limited to 60% of AGI. So this is another tax benefit. And that's available not only for this year, but the way the current law stands, it's going to go forward into 2021. And I don't know if it'll be there in 2022, but right now the law says that's going to be there. So that's another tax break that somebody can look at and say, wow, my cash donations, as long as I can show proof of them, I can deduct all of them. Yep, you can. That's a big deal.
Wow.
Yeah. A big deal.
Yeah.
And here's a third one, but be very, very careful how you do this. There's still time to do a Roth IRA conversion. What is that? That's where you take money out of your IRA. It gets taxed for this year, and you roll it into a Roth IRA. That Roth IRA grows tax deferred, and given certain limitations, 59 and a half, that's the big one. Everything comes out tax-free whenever you access that money, but you have to hurry. Now, if you have an advisory firm that you're working with and you already have an IRA and a Roth IRA, you can probably still mechanically get this done. We're doing some, not many, but we're doing some, but they already have both accounts in place, and it really just takes one piece of paper to do that, because the conversion has to take place physically in the calendar year that ends the 31st of December.
So if we don't have those accounts already set up and established and maybe even already kind of in the same place, that might be a little bit more difficult to get in under that deadline.
You're going to run into some potential trouble. It just may take too long, but you still have probably a week, 10 days. I know with our clients, if they have both the IRA and a Roth with us, yeah, we can do it. We can do it probably in 3 days and get it done.
Now,
so there's still time to do it. Talk to your advisor. If you don't have an advisor that's thought about that before this end of the year, maybe you want to talk to us and see how we can make it work.
Sure. Now, Ron, as I understand it, there used to be the ability to sort of undo a Roth conversion and kind of take a mulligan. Whereas now, once you've done it, it's water under the bridge and you cannot undo it. And so you really need to have the help and the assistance of probably a competent, qualified, experienced advisor to make sure that you're doing it right.
You have to do it right, and doing it right means that once you do it, it's irrevocable. You don't get a do-over on it anymore. So you have to make sure that, because it's a taxable event, you have to do kind of a tax analysis of what you're trying to accomplish. But the overlying kind of emphasis is, how do I still get some money out of an account, an IRA, that's going to be taxed forever? And ladies and gentlemen, a lot of people think, given all that high-priced talent we send to Washington, D.C., that they're going to continue to spend and increase our taxes to pay for it. If that's going to be our fact of life and what we have to live with, the more money ultimately now we can move into a Roth IRA, a tax-free account, the better it is. I'm a member of Ed Slott's Master Lead Advisor Group. Some people are familiar with him. He does a lot of work on public television. He's one of the biggest
tax
programs that generate
he's a huge
donations. Yeah. And one of the things he always says, and makes me laugh every time I say it, taxes are on sale.
Yeah.
Ladies and gentlemen, taxes are on sale, meaning they're probably as low as they're ever going to be in our lifetime. So why not take advantage if you can? And if this hasn't been set up in your world, make it one of your New Year's resolutions that this year we're going to set up a Roth account. Because frankly, I don't know if long-term they're always going to be available, but I think for those people who have them, you'll always be able to use them. So those are three things: the qualified charitable deduction, thinking about a Roth conversion, and this year, all your cash donations are fully deductible if you itemize deductions on your tax return. So 3 good ideas to take a look at.
Yeah, and if you'd like to take a look at any of those specifically for your situation, give Ron Corser and Associates a call, 616-301-2581, 616-301-2581. The help, the assistance of a CFP, Certified Financial Planner, in making sure that you get any of those financial strategies, strategic moves correct. And we don't want to make mistakes there, but these are some to consider and take advantage of if they are right for your situation. 616-301-2581, 616-301-2581. Ron, you mentioned that you didn't know if the opportunity was always going to be there. And I'd like to harken back to the beginning of this year, before COVID, January 1st, and for the first several months of the year, the big news in the financial world that we were all talking about was the passing of the Secure Act. The Secure Act fundamentally changed several laws and opportunities with IRAs and tax-deferred dollars. And my point being is that they can change the rules. It's been proven and shown that if they choose to, if they see fit, the rules can change. And so this opportunity that we have today for taxes to be on sale and to take advantage of Roth IRAs may be something that we all should be paying more attention to.
It really is. And let me add this, this little comment. Sometimes people come into our office and they say, well, tell me about a Roth, but I don't think I want them because they can change the rules. And here's how I respond to this whole Roth. If you already have a Roth, they're not going to change how Roth accounts are taxed. They've already taxed them. I mean, they're crazy down there in Washington, but they ain't stupid. They're not going to get you so mad that they're going to change it. What I think they will do, and it's a possibility, and it's just my opinion, is they can say, okay, effective January 1st, no more Roth accounts.
Well,
but if you have a Roth account,
that
you
what
can
they
keep
did with
using it.
Stretch IRA, Ron? Isn't that kind of deadline that if you had one, a stretch IRA, you had inherited a parent or grandparent's IRA before this date, then you're under the old rules and you can keep it. But if you inherit it after this date, so sorry, so long, that is no longer an option for you.
Yeah, here's a great example of that. The inherited IRA, when you inherit it, say, from your mom or dad as a child, you could just keep taking out a requirement distribution based on your life expectancy. Well, that changed this year. And what they said was, effective the 1st of January 2020, inherited IRAs no longer allowed to exist. But if you had one, if you inherited it in 2019 or earlier, you can continue to use the old rules, which means you can stretch it throughout your entire life. Now, the inherited IRA says you can inherit an IRA. Within 10 years, you have to liquidate it. And that includes the Roth IRA also. You don't have to take a requirement of distribution. So we have some clients whose parents passed away this year. They inherited the IRA. They understand that they're under no compulsion to take out a little bit every year based on life expectancy. But in our planning process, when it comes to, especially for income planning, we're factoring in that we have to liquidate this account not later than 10 years from now, not later than 2030. So the decision is that, well, I can take a little bit each year if I need it. If I don't need it, I won't. But keep this in mind. What might happen if you wait for 10 years? You know, if we have 7 good years in the market in this decade, that inherited IRA could double in value. And then you have to liquidate the whole thing in 1 year. Hello, higher tax rates. Hello, higher tax brackets. And if it's high enough, you might get a thank you note from the IRS for your contribution to the well-being of our country. I don't know if they send it, but they might. So that's another rule change. And it's really important to understand that rule. You can't convert an inherited IRA to a Roth. You're kind of stuck with it. It's a blessing that you got from your parents, but let's make a rational decision on how to empty it over the next 10 years. And we can help with that. So if that's you and you want a little help or knowledge, give us a call, 616-301-2581, 616-301-2581, or go to our website, www.roncourser.com. Let us know what you're interested in, and we will get back to you faster than a speeding bullet to help you out.
Well, they are there to assist. He is a CFP, a certified financial planner, experienced and qualified professional in the world of financial investment, retirement planning, also with a forward-looking perspective on tax planning, trying to not just allow you to grow your money, but keep as much of what you have worked for and grown as possible. That's what being efficient with taxes is really all about. And if you'd like that help and assistance, again, just give a call, 616-301-2581. Go online, roncourser.com, roncourser.com. And I was having a conversation around the holiday table for Thanksgiving a couple weeks ago, Ron, with my family, and we were talking about managing taxes. And my comment to them was that while managing investments and risk and growth was probably important to build that lump sum in order to keep as much of it as possible, tax planning and tax management was really kind of the key to the second half of the game. And if we weren't looking at that, that we could lose the game even with a big lead at halftime.
Yeah, we can. One of the most important things people can do is to use their advisors. What do I mean by that? If you have a tax preparer, one of the greatest things you can do for him and for yourself, or her and yourself, is to go to him and say, I want to do some tax forward planning. I'm thinking about converting some of my IRA. I'm thinking about this investment. I'm thinking about these things. Tell me how that's going to impact my tax return for 2020. It's pretty late now to do some of that, but you can certainly do it going forward next year. Use your advisors. Use them. I tell people it's worth paying your CPA money to do a tax forward pretend tax return for you that says, if you do this, this will happen. If you do that, that'll happen. He'll love you giving him extra money to do the work. You can always do that. But just think about it. You may come up with a strategy that you didn't realize was available to you that could really have an impact long-term on the well-being of your family, your wealth, your children and grandchildren. Use your advisors. I mean, I always encourage our clients to call us. Sometimes they'll call and say, Ron, I don't want to bother you. And I say, you're supposed to bother me. I'm your advisor. You're supposed to bother me and ask questions. Please do that. And then they feel a little better about it. But use the people, the professional people in your life, whether it's a lawyer, a CPA, your advisor, your doctor. These are professional people. You ask them questions to help you make better decisions going forward.
Yeah. Well, Ron, you gave the example of the Secure Act and the stretch IRA, the ability to do that now ending. It's not that we no longer have the ability to pass assets on generationally. It's just that the way that we need to work and plan and structure to achieve that goal has now changed. So my point is that the planning process evolves. Even if we had worked with that professional 5 or 10 years ago to put a plan together to achieve our goals, that planning is not a set in stone, set it and forget it type of ordeal. It is an evolving process. And you referred to it as the planning process, which is what sort of sparked that in my mind.
Yeah, keep in mind that the things that we do today will impact us 10 years from now. And we may not understand the full impact of that. We may not. But it's important to use the people in your life to make good decisions. It's important to have all the information that you need to make good decisions. So let me just touch on something. We know, at least down deep inside behind our belly button, that probably there's going to be a change in taxes and how much we end up paying. We know that. We can sense it, we can feel it. So what are we going to do about it? Let me ask you, ladies and gentlemen, when you've asked your advisor, what about taxes? How have they responded? My response is, I think they're going to go up. What do you think? If you think they're going to go up, let's figure out what we have to do today. Not only to avoid paying more, but maybe to take advantage of that. And it comes down to one of the things that probably is going to change going forward is the estate tax rules. You know, right now, individuals can, it's about 11 million 8. So there's close to $24 million that we can pass on tax-free. There's probably going to be adjustments made to that. That's one of the great political taxes in the world. When I got in this business back in 1994, I think it was $650,000 that you could pass on tax-free. So those of you out there who are thinking about making gifts, and think about this as a gifting strategy, you can give $15,000 away to anybody. No harm, no foul. You don't have to justify it. You don't even have to know the people. You can give $15,000 away to pay bills for somebody. You can give $15,000 away to your children, to your grandchildren, particularly those of you who want to see how their grandchildren or children are going to use what you're going to plan on leaving them. It's a great way to do it. A couple other things you can do. Number one, you can pay directly if you have children or grandchildren in college. You can pay directly their tuition bills, and that's there's nothing you have to do to talk about that. You can do it because it's not considered a $15,000 gift. You can directly pay a university. You can directly pay medical bills that aren't covered by insurance for your children or grandchildren. We've done that. We have absolutely done that. So that's another way that you can kind of help your family out, your children and grandchildren, and make good use of all the things that you've worked so hard to do to accumulate wealth, and then to see that, pass it on to your family, to keep it in the family. Most people want to keep their money in the family. I do. My wife and I do. Most of our clients do. They also want to be in a position to make sure that they have all the money they need in retirement. And if there's anything left over, bless you, I'm going to give it to the children. I get that. And I think that's a wise approach to take. But there still are times we can kind of intervene on behalf of our children or grandchildren. And those are two great ways. Pay a bill for the medical bill that hasn't been covered by insurance, those deductibles, which can be really expensive. Or you can make a direct payment to the school, the university, the high school, paying tuition. You're allowed to do those kinds of things. There's actually a tax savings in that you don't have to take money, so to speak, out of your IRA to do it, but you can do that. And it's a great way to help your family. It's a great way to take a look and see, how are they going to respond to me doing this? And the other thing is, if you're anything like me, I get a great deal of joy trying to help kids and grandkids in my family. It's not that a lot of them need it. I just like doing it. And I'm good with that. So sometimes if you just like doing something that makes you feel good, do it, as long as it's legal. It has to be legal.
Well, again, planning strategically, that's what Ron Corser does there at Ron Corser and Associates. He is a certified financial planner. And if you've got questions, if you've got concerns, if you would like to be more proactive in your planning, or if you would like to update the plan that you proactively put together, maybe just a couple years ago, Ron Corser can certainly help you out. Pick up the phone, give a call, 616-301-2581, 616-301-2581, 616-301-2581. Ron, to identify those kind of opportunities, and maybe sometimes because there's a life event or a deadline looming, or I can imagine with COVID and the election cycle, maybe with uncertainty about what the future holds. These are some of the reasons I think people often are motivated to have that first discussion with a financial professional, or to review and update the plan that maybe they had put together. And all of those are good reasons to get that conversation started. There's really not a bad reason to get that conversation started.
No, there really isn't. There really isn't. And a lot of times it's just kind of us old folks sitting back and saying, I wonder how I can help my kids without spoiling them, without just giving it away with, hope that it works out. Here's another little tidbit. I'm a big fan and believer. One of my favorite accounts is a Roth IRA. So when I've gone and talked to my children, we have two sets of families here. I got one that is in the highest tax bracket there is. I got the other one that's in the lowest tax bracket there is. But particularly with the higher tax bracket family of mine, I talked to them about the need for a Roth IRA to have tax-free money. One of the things a parent can do for their children or their grandchildren is, if they want to do a Roth conversion, it's a taxable event. Well, you could always just offer to pay the tax for your kids. You're allowed to give them $15,000, up to $15,000 a year, without even filling out any paperwork. So if you think it's important enough, you want to encourage them to do it, but maybe they're afraid to deal with the taxes, you could say, well, I'll pay the tax for you. And a lot of times they're not going to do 100,000 or 500,000. They'd maybe do 10,000.
Ron,
So
I even was talking to somebody recently who, and they were friends, associates, and was not in a similar family type of wealth situation as I was growing up. But they said that their grandparents actually did that gifting over time, but they did it into a life insurance vehicle that turned into significantly more money than even those gifts could represent.
That is a great strategy. We've used it with one set of children, where we literally have bought life insurance and paid for it. And the biggest hurdle to doing that, there's actually two things you need to consider. Number one is just the negative feeling that sometimes props up, because people have said, well, life insurance is not a good investment. It's not this, it's not that. Life insurance is not an investment. All life insurance is the way to pass on wealth to the next generation, and also to create tax-free income. So if that makes sense, do it. But it's a great thing to do, because cash value life insurance costs a little more on a premium basis. But what a great way to gift things to them. Because over time, you have a 30-year-old that maybe doesn't have the resources to buy a solid cash value life insurance plan. Well, you front the premium. You do it. Instead of giving them $5,000 at Christmas, put it into a life insurance contract. Because down the road, that's an incredible asset to have. It provides tax-free income. It can provide access to cash if they get in trouble, or they have a bill to pay, or they're starting a business. One of the ways my wife and I started our business here back in 1994, when we went totally independent, nobody was going to lend us money. So we used life insurance. It's the same thing Walt Disney did to build the Disney empire. We took loans out of our life insurance policy, the cash value, to give up startup capital for our business. So there's a lot of uses for it. It's just another way to pass on to the next generation something of value that makes great sense at times, used properly.
Well, I think in the context of this conversation, that's the part about gifting for others. And we had a great talk today with certified financial planner Ron Courser about the holidays, about how year-end planning can be hectic, can be stressful, about how we need to try to make it less of a stressful event on ourselves by sticking with some discipline and having some parameters for our budget and our spending. Ron helped us identify a few key strategic opportunities to take advantage of, potentially, and in most cases before the end of the year. If you'd like to take a look at those, pick up the phone, give a call. Ron Courser does make his time available. Always happy to hear from a viewer or a listener to the program. All you need to do to get in touch is click the button around the show if you're watching it on one of your players, or give a call to Ron Courser's office, 616-301-2581, 616-301-2581, or you can go online, roncourser.com, roncourser.com. Well, Ron, as we're getting near the holiday season and the turn of the calendar to a new year, I'm excited about that. I'm always excited each and every week we get the opportunity to speak with you. I know with holiday schedules, there may be, some special programming coming up, but we look forward to pretty consistently talking with you each and every week. And we thank you for being here as our resource.
Well, I appreciate the opportunity to talk to folks on the radio program. But to me, this is fun. It's talking about things that can help people. I like doing it. I want to wish everybody before Christmas a very Merry Christmas. I'll probably do the same thing next week and probably wish you a Merry Christmas on the very last day of the year. So you guys take care. Get that Christmas shopping done as early as possible. And we'll talk to you next week. Thanks.
Talk to you next time, Ron. We always appreciate Ron's time. He's looking forward to hearing from you, helping however he can. He's a great guy. Always a good conversation. You always come away learning a little bit more about how to properly manage your money. 616-301-2581. We'll talk to you next time on Your Course to Retirement.
Thank you.
Tune in to Ron Courser's full radio program, A Course to Retirement, Sunday mornings at 9 a.m. on WOOD, and visit roncourser.com for many valuable resources, including other great episodes of Your Course to Retirement.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor.
Ed Slott's Elite IRA Advisor Group is solely an indication that the financial advisor has attended training provided by Ed Slott and Company, passed biannual examinations on material covered at conferences and in webinars, and met other membership requirements, and does not constitute an endorsement of any kind. Ed Slott's Elite IRA Advisor Group members pay a fee for the educational programs that allow them to be included in the Ed Slott's Elite IRA Advisor Group. Membership does not guarantee investment success. Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. Advisory services offered through Brookstone Capital Management, a registered investment advisor.